everyone, welcome back to my channel. I'm Eunice here. Today, I'm not covering a project analysis, but something more casual and real. I've seen this happen many times, and recently a client shared with me his honest feel that whenever he sees headlines news like property selling fast or almost sold out, he feels like he's falling behind, especially when he sees friends buying and collecting keys, and he starts wondering if he's already too late. So after a while, he told himself he shouldn't wait anymore. So he proceeded to went to a show flat and make a decision quite quickly. But when we spoke after that, he couldn't clearly explain why this project, why this price, or why now, because he didn't buy with clarity. So he bought to stop his fear of missing out. And sometimes later, he came back feeling unsure, because when he looked at it deeper, he realized there were cheaper alternatives and many similar units in the area. And that's when his worry started to set in. So today, I just want to share the 3 types of buyers who are more likely to struggle, especially when the market starts to slow down. And this isn't just a theory, it's based on my real patterns I have personally seen from working with my clients. First, let's talk about the first type. This is what I call the FOMO buyer. Also, I classified it as emotional buyer. And in Singapore context, this is not something very uncommon because FOMO buyers tend to rush in simply because everyone else is buying without really comparing the options, and they assume they can always exit later, which make it very risky. The reality is, the developers and marketing are designed to create the hype. So you often hear things like selling very fast, last few units, and the price is increasing soon. And all this create pressure to act quickly. So this type of buyers, right, they will end up buying because everyone else is buying, or just simply this launch is very hot, with the mindset that prices will definitely go up and they can sell higher next time. But that assumption doesn't always hold true. I have clients come to me after visiting just one show flat, and they already feel like they need to make a decision. So if you seriously love the project, right, paying a bit more is a personal choice, and profit or loss might not be your top priority. But if you are buying for investment, right, you really need to go deeper and understand whether the number makes sense and compares with the surrounding numbers and projects before committing. So how do we overcome FOMO? FOMO means fear of missing out. If you want to avoid making a rushed property decision, you need to get comfortable with one thing first. Be okay to walk away. Just because you are there, just because everyone else is buying, doesn't mean you must buy. Before you even go for a viewing, set your criteria first. Know your budget, know your layout, and your conditions. If it doesn't meet what you already decided, then you walk. Don't just focus on one project. Take a step back. Compare with nearby resale prices and other launchers, and even look at the better stacks within the same project before you commit. Second, the type of buyer who overpays. So this group of buyers, right, usually pay a less desirable unit at a high price. And this group of buyer may not even know what they have overpaid. If you can't clearly explain why the prices make sense, chances are you are overpaying. It may not feel like a problem today, especially when the market is moving, but it becomes a real issue when you try to exit, because buyers will always compare and go for the cheaper alternatives. So, sometimes it's not just about whether the project is good, it's whether your specific unit is worth the price you are paying. This is a real example. In this project, if the bin-facing unit, right, is costing 200k to 300k more than the pool-facing unit, and if you don't really have a choice, touch your heart and ask yourself if you will still buy it. And when you choose a weaker unit at a much higher price, you will make your exit harder. Imagine if the next time buyer who is looking at this development, will he choose this unit or he will choose a pool view unit, which is selling at a lower price in the resale market. So how do we avoid overpaying? So I'm talking specifically from a new launch project perspective. So there are 2 key things to understand. First is the developer pricing strategy, because pricing usually moves in phases. So we have phase 1, phase 2, and phase 3. In phase 1, prices often slightly softer as developers are testing the market response and they will try to build the hype. By phase 2, price usually move out slightly, but it might not be very significant. In phase 3, it is in the latest phase where prices tend to be pushed out more aggressively, especially if the sales are strong and there are fewer units left. Like the example that we have seen in the previous slide where the bin center is selling at a much higher price. This is where the profit is maximized for the developers. Second, you need to understand where the premium is being applied within the project, whether is it due to the phasing or level or unit type. Not all the units are priced equally for the same reason. So instead of just looking at whether the project is good, focus on whether your specific unit makes sense at a price point. I've actually shared more about how to identify the sweet spot unit in one of my recent videos, so you can check that out if you would like to understand deeper. The third type is the buyer with no exit plan. Honestly, I feel this is the most dangerous one. So why is it dangerous? Because they buy based on what they feel is right at the moment, but they haven't really thought about what happened next, and who am I going to sell it to in the future, and what will my unit be competing with, and when should I exit. So when the time comes to the selling, right, they realize there are many similar units in the market and nothing makes their unit stand out. And that's when they start to feel a bit stuck. So take a look at this example. The Tannery and Hillrun Residences at Bukit Panjang area. For Tannery is located right above the Junction 10 and just opposite the Bukit Panjang MRT. And it is mostly made up of 1 and 2 bedders in the entire development. So on the surface, it feels quite convenient. But as compared to Hillrun Residences, which is just located right above the Bukit Panjang MRT, which has a wider mix from 1 to 4 bedders. And this is directly connected to the MRT with Hillrun Mall just right at your doorstep. And you will start to see how one naturally attracts a stronger and broader pool of buyers over the time. So let me ask you something. If 2 condos are located just diagonally to each other, why does Tannery sees a 40% of unprofitable transactions and the Hillrun Residences sees only a 5% of unprofitable transactions? Tannery has been on a downward trend while Hillrun Residences has been moving up from 2013 to 2020. The difference is actually quite simple. The Tannery is mostly 1 and 2 bedders, so it's mainly attract investors, singles, couples. Family profile might not stay here. So when there are too many units targeting the same group, you will get heavy competition during resale, especially when Hillrun Residences also came with similar supply, creating oversupply in this segment. But here's the key. Hillrun Residences is directly connected to the MRT and with Hillrun Mall right at the doorstep. So naturally, it attracts stronger rental demand and buyers, which supports prices over the time and push out the transaction volume in this project, while Tannery struggles. So the key takeaway here is this: don't just look at the price, always ask yourself, who am I going to sell this to next time? So how do we plan for the exit? Let me share something I've seen before. I have a client who bought a unit because he liked it, and the layout was also nice, project is also good, everything just feels right. And at the point of time, he didn't really think too much. He just feel like, okay, this one can already. But earlier this year, he came to me feeling unsure because he has been trying to sell this unit for almost 1 year and only received 1 offer, and it didn't meet his expectation. So later when we sat down and reviewed everything, and that's when I realized his unit was facing a school, with the balcony directly looking into the classrooms. So in the day, there was noise and no privacy at all, and at nights it feels really uncomfortable. Meanwhile, within the same project, there were other pool-facing units and open-view units priced very similarly. And so when buyers came in, they naturally chose those instead. His units wasn't bad. It just wasn't the preferred choice because there were better options. So it's not that he made a wrong decision, but he didn't think about how the next buyer will see the unit. So if you are buying now, always ask yourself, if I were the next buyer, would I choose this unit? And that's why sometimes I actually advise my clients not to buy when I don't see a clear exit. And alright, so that brings me to the end of this video. I'm sharing this not to scare you, but because I've seen how this decision actually plays out over the time. Property is still a good asset, but today it's no longer just about buying. It's about buying right. So you don't really need to be the fastest, but you need to be the clearest about what you are doing. So if you are just thinking of buying, it's important to take a step back and ask yourself, am I making this decision based on clarity or based on pressure? If you need a clearer direction on how to move forward, feel free to reach out to me at this number here.